What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Spotify. The streaming music service just completed its direct listing on the New York Stock Exchange, sort of an unprecedented new style of IPO. So first wanted to make a video breaking down kind of what they did with this new IPO process, and then going into the financials, the business model, and why I think they have the potential to become the Netflix of music. First of all, let's talk about the IPO or direct listing. Unlike a traditional IPO, where a company sells stock and lists on an exchange and pays bankers to help them and does an entire roadshow marketing to institutional investors, Spotify did none of that. The biggest reason was they didn't really need to raise money, but they still wanted to have their shares on an exchange so their employees could liquidate their stock options. After all, Spotify's been around for more than 10 years. It had a value of between 10 to 20 billion in the private market. So there was just a lot of employees with a lot of stock, but they just got to the size where it made sense to be listed on an exchange. So they opted to do this thing called a direct listing, where they had no bankers. They just took buy and sell orders the day they started listing on the exchange. A lot of people were questioning whether this was possible, assuming that it was going to lead to a far more volatile period of price discovery during the IPO. But now that it's all said and done, Spotify's been trading for about a week now. Sure, it was volatile. The stock opened up at about 170 right when it started trading, went down to the 130s. Now it's at about 147 as I make this episode. But that volatility really isn't that crazy in terms of IPOs in general. Overall, I thought this was tremendously successful for Spotify, especially given that this thing had never really been done before. This opens up the door for companies like Uber, Airbnb, and other really large private companies to go public without banks if they don't need to raise money. Wall Street, the traditional bankers are probably hating this because it shows that they're not really as needed as everybody thought they were. Now let's talk about what the business actually does. So Spotify is a music streaming company. Just a couple quick stats. Spotify has 71 million subscribers, 157 million monthly active users, 35 million tracks, is available in 65 markets, a massive streaming company. A little background on the music industry, which was seeing, kind of contracting as a whole for, 5 or 10 years before streaming started becoming a bigger and bigger piece of the industry. Now that streaming has really taken off, up 60% last year, the music industry has returned to growth. Spotify is the biggest player in streaming. So in many ways, the entire music industry has Spotify to thank for kind of this resurgence, which I think we are in the very, very, very early days. And that's why the more homework I did on Spotify, the more bullish on the company I became. The opening line of their F1 or the SEC filing they did to go public really fascinated me. Our mission is to unlock the potential of human creativity by giving 1 million creative artists the opportunity to live off their art and billions of fans the opportunity to enjoy it and be inspired by these creators. So Spotify, is really a multi-sided platform. On one end, they have the consumers, you and me, who are listening to the music, enjoying it from that end. On the other side, they have the artists, the musicians who are putting out this content and monetizing it and trying to make a living off of the platform. And although they're in music now, I think they're going to start to expand a lot far beyond that, sort of what this line insinuates, just to unlock the potential of human creativity. A little bit more on that later. In terms of competition, Spotify is going head to head with some of the largest technology companies in the world. First and foremost, Apple. Apple has Apple Music, which according to The Verge in February had 36 million paying subscribers, which makes it about half the size of Spotify, but appears to be growing at a much faster clip. So there's some speculation about whether Apple could overtake Spotify. Additionally, I use Amazon Music on my phone, and I know Amazon is continually pushing on perks for its Prime subscribers, and there's no doubt they have ambitions to get into the music game too. Those are just a couple of the names. Google also has a very similar competing service. So Spotify is really going up, the biggest heavyweights in tech, all who have way more access to capital than Spotify does, and all who don't care about making money on music streaming in the near term. So this is the biggest risk to Spotify, is that, there's a ton of companies coming right for their throat. So now let's talk about financials. And these slides that I'm about to show are from the Spotify Investor Day. They did an incredible job putting all these videos and charts and information on their website to be transparent right before they went public. I think this is one of the best investor relations teams that I've ever seen, put out just amazing content. So I'll make sure to put the link in the description. You guys should all check out their investor page if you want to learn more about the company. But anyway, as you can see, their revenue has climbed from 1.9 billion, and this is in euros, remember, to 4.1 billion euros in 2017, growing pretty significantly. They just put out guidance for 2018 with between 4.9 to 5.3 billion, so about 5.1 billion euros at the midpoint. That would be representing about 25% growth from the year before. Now, there's a couple interesting trends in Spotify's business. One of the most is that the average revenue per subscriber is going down as they introduce new things like family and student plans. They claim that their monthly churn is going down as well because their product's getting better, so the lifetime value of customers is actually still going up despite this number going down. We're at a really fascinating inflection point in Spotify's business where their premium subscribers are slated to grow over 30% this year, but their revenue is slated to grow under 30% because of this difference in ARPU. But I think eventually that could reverse and we could see Spotify's revenue grow faster than their premium subscriber growth, but that's further down the road. In terms of profitability, the company's been operating at a GAAP loss. They're not losing too much money, but a couple $100 million. Their operating margins are improving slightly, going at about -9% for 2017. So the company's sort of trying to run at break even, invest everything in growth, sort of this Amazon, Netflix, Tesla-esque model. In terms of free cash flow though, the company is producing some free cash flow. This is taking off all those non-cash expenses. So as a business as a whole, this is why they didn't need to raise money. Spotify has $1.5 billion in cash, no debt. Their business is actually producing cash flow. So Spotify is in a pretty healthy financial position, and my guess is they're going to continue to operate at sort of break even, try and invest everything in growth, and just tackle the monster opportunity ahead of them. Now let's talk about why Spotify could become the Netflix of music. The biggest reason I use this analogy is first because they're streaming services that cut out the middlemen, mega disrupting legacy media industries. Netflix is going right to consumers with video content. Spotify is going right to consumers with music, audio content. And so I think that on surface level is a very strong similarity. Also, these companies are leveraging the data that they have based on what consumers are doing with their content to constantly improve their service. These are as much data and artificial intelligence companies as they are media companies, and I think that gives them a huge advantage. Reason number 3 is that I think they're gonna get heavily into original content. Spotify is going to start putting up money using its excess cash flow to fund creators to do stuff exclusively for Spotify, and this will start to try and build their moat against Amazon and Apple. For instance, right as they IPO'd at the end of March, Spotify started making all these really interesting deals into new forms of content. Specifically, I'm talking about partnering with Taylor Swift, who famously left the platform. Now they have re-partnered with her for a Spotify exclusive vertical video, aka mobile optimized, for her new Delicate song that they announced on March 29th. On March 28th, announced a special podcast. They'll be talking about the history of musicians and how they rose on the come up, because this shows Spotify doesn't want to just be a music platform, but they want to be a podcast and just generic audio platform as well. So I think this expansion beyond music is really fascinating and something I'm going to be watching super closely. Also, they announced this thing called Spotify Studios, where they're going to be launching like secret pop-up studios, teaming up with huge artists to try and discover the new wave of musical talent and get them in these studios that are run by Spotify. So this is Spotify getting into original content, producing their own music, becoming more and more like a real record label, and owning the content that they distribute on their platform, not just licensing it. I think this is exactly where they should be headed. To see them sort of lay out the seeds for like going vertical in their content right before they IPO, I think they're sending a signal. Also, they dropped 2 exclusive music videos with The Weeknd on Spotify, and this was also announced right before the IPO. That sort of wraps up my coverage of Spotify. They're going direct to consumer to share music. They're getting into a ton of other content. I think they're an incredibly well-run company. Just the more homework I did into them, the more excited and impressed with them I was. I think the financials are great now, but I think they're only at the very early stages of growth. Music streaming as a whole is going to continue to explode, and I think if they can successfully get into producing original content and even video and podcasts, which it looks like they're starting to dabble in, there's no telling to how big this company can get. Netflix is worth well over $100 billion. Spotify today trading at 147 per share, assuming about 177 million shares outstanding. That would give Spotify about a market capitalization of 26 billion US dollars. Now remember, their financials are reported in euros, so that makes valuing the company a little bit tricky. They're expected to do about 5.1 billion at their midpoint in revenues, but that's in euros. If we translate that at the current exchange rate of $1.23 per euro, that gives us to about $6.3 billion worth of revenue in US dollar terms for Spotify in 2018. If we divide 26 billion by 6.3, then we get to a price sales ratio based on 2018 of about 4.1x. So, Netflix trades at a significantly higher price sales multiple than this, about 7 to 8x. And they are growing a little bit faster, but Netflix is way more established, way further along in their business model. And that kind of shows you that if this is a streaming service that can take off with these subscription numbers, with the incredibly low churn that Spotify has, I think we could see Spotify boast a price sales multiple very similar to Netflix in the near term as the market begins to understand their story in a very similar vein. So I'm incredibly bullish on Spotify. I think there's a lot of risk associated with the company because of Apple and Netflix, but they have a massive opportunity. I think they're well run. I think they're a first mover, and I think they're going to continue to build their moat with this original content. So that's why I think 4 times price sales, really just isn't that expensive for this company. Last point that I wanted to make is they have an owner, operator, founder by the name of Daniel Ek, who's only 35 years old, who owns a significant piece of stock in the company. He's an incredible visionary. Like, he's still young. His best years are ahead of him. My favorite thing to watch for a disruptive company is to have a CEO who owns a ton of stock, who started the company, who it's his vision. He's still running it. He's shown a track record of incredible success. He is a phenomenal leader. So when you sprinkle that on top of the Spotify story, I think it gets really, really exciting. Anyway, this is Hyperchange. That is my wrap up of Spotify's IPO. I have a ton more content on Spotify on the way. Kevin Kuh, one of my buddies and the Hyperchange's creative director, is actually a musician. He has a band called Pool Cosby that mainly makes money via Spotify. He has a ton of ideas about Spotify, so I'm gonna get him on the show soon, get sort of the artist take on the company. I think that's gonna be really fascinating, so stay tuned for that. Also, as always, huge shout out to you guys for watching, and also especially the Hyperchangers who support on Patreon. You guys should check out our page if you want to learn more about that. Anyway, I'll see you guys next time. Have a great weekend.